Have you ever wanted to build a supremely durable portfolio that can last the test of time? Not just decades, but centuries? If you're Ray Dalio, founder of Bridgewater Associates, the world's largest hedge fund, then the answer is yes, and he calls it the all-weather portfolio. Hi, I'm Shawn, and this channel is all about the principles of investing, from stock tips to iconic billionaires, the best strategies, and our favorite tools. The Investors Podcast has everything you need to know. So let's get started. Dalio has reflected publicly about his inspirations for designing such an enduring strategy, and this dates back to his early days working in the world of finance in 1971. At this time, Richard Nixon had just announced the United States' intentions to separate from the Bretton Woods system by suspending the dollar's convertibility into gold, thus marking the beginning of the quote fiat era. In other words, the US government could no longer honor its promises to redeem dollars for gold at the rate they had agreed to do so, which essentially means that they had voluntarily defaulted on the debts they owed to others in the form of gold. Some would call this currency debasement, meaning that the dollar's value had been depreciated and now was no longer worth what it was previously. To people around the world who hold US dollars, they saw the value of their holdings decline before their eyes. Surely this is a bad thing for stocks, right? Well, the stock market rallied 4% the following day, and Dalio was puzzled at how this implicit government default could trigger a positive reaction from investors, leading him to study centuries of currency debasement. He found that while infrequent, such deviations in currency pegs were hardly unprecedented. Many great empires, from the British to the Romans, had chosen to devalue their currencies rather than balance chronic spending deficits. This realization prompted the natural yet deceptively simple question: what kind of investment portfolio would you hold that could perform well across all environments, be it a currency devaluation or something completely different? Basically, how can you invest for the long term when even the greatest empires fall and their currencies are destroyed or greatly diminished? Since no one society has prospered forever, with all of them eventually breaking down, he decided that he must invest broadly and diversify so that his wealth could be protected no matter what. Dalio has a very unique way of thinking about investing that in part relies on breaking down assets into the fundamental components that drive their returns. He and his colleagues at Bridgewater propose comparing asset classes to seasons in a year. During certain environments, some types of assets will perform better or worse than others, so the trick is effectively balancing different types of asset classes like stocks, bonds, commodities, real estate, cash, and more, such that they complement each other's strengths while limiting each other's weaknesses. As Dalio has said, quote, knowing how to diversify well is more important than almost anything. So they divided the possible economic environments into 4 different quadrants based on the relationships between growth and inflation, because the value of any investment is primarily determined by the volume of economic activity, aka growth, and its pricing, aka inflation. With these quadrants in mind and awareness of holding his wealth all in one place or currency, the hope was to design the ultimate passive portfolio that one could set aside for many years and still achieve satisfactory returns, though Dalio compares the process to being more like, quote, inventing a plane that's never flown before. Despite its unproven track record, a number of institutional investors, particularly pension funds, love the idea for this strategy given their distant future financial liabilities to retirees, and they agreed to allow Bridgewater to manage some of their funds this way. The portfolio owes its lasting success, though, to the Bridgewater team's ability to effectively map various types of asset classes onto these quadrants of economic environments. They also helped pioneer the institutional use of Treasury inflation-protected securities, also known as TIPS, which are US government bonds with their value tied to an inflation index. Here's what Bridgewater has to say. Quote, inflation-linked bonds, also known as TIPS, do well in environments of rising inflation, whereas regular stocks and nominal government bonds do not. As a result, tips filled a diversification gap that existed and continues to exist in the conventional portfolio. Most investors do not hold any assets that perform well when inflation surprises to the upside outside of commodities, which tend to comprise only a tiny fraction of their overall holdings. Finding uncorrelated assets like tips are the holy grail in building a great portfolio. 15 to 20 statistically uncorrelated holdings in a portfolio is what he strives for. And without sacrificing returns, Dalio aims to use various asset returns to offset each other, thus creating a more stable series of portfolio returns over time. Basically, you want to avoid your investments having too strong of a positive correlation, which means that they tend to move up and down at the same time. If you can find investments that are uncorrelated or negatively correlated, their price fluctuations can be used to offset movements in the other while still yielding positive gains in total. This helps you to continue compounding over time with less concern about the downside. While the all-weather strategy is by no means a get-rich-quick scheme, the logic is quite effective, and it's defined by embracing the holy grail of investing principles that help ensure wealth preservation over time. Of course, Bridgewater isn't keen to give away its secret sauce to tell you exactly which specific assets it owns and how it does so, but the purpose and logic of the all-weather portfolio ought to be our takeaway, especially if we're investing not just for ourselves, but for our loved ones, generations into the future. It's worth considering how durable our portfolio allocation really is. Have you ever checked the correlations between your investments? If not, you can do so for free using our TIP finance tool. Just input your stock holdings to see how close you are to achieving the holy grail of investing. We should also ask what our true investment time horizon is then, and whether our current investments are structured to survive the passage of time and range of economic environments until that horizon point. So tell me, how would you design your all-weather portfolio? That's it for this week, guys. Thanks for watching, and let me know, what do you all think of Dalio's all-weather portfolio and the holy grail of investing? Please also like, subscribe, and share your comments below if you liked my breakdown. We love hearing your thoughts, so tell us, what are your biggest takeaways from Dalio's principles? And if you want to track Dalio's investments for yourself, you can do so with our TIP finance tool in the Legend Investors section. Just a reminder, nothing in this video is financial advice, and I'd encourage you to do your own research before making any investment decisions. And don't miss my video on getting started with small deals in commercial real estate, where I teach you more about the fundamentals of commercial real estate investing, optimizing your returns, how to find the right properties, and so much more. See y'all next time. Not only that it's possible, but that there are probably far more opportunities than you'd expect. Traditionally, individual investors have had to use real estate investment trusts, also known as REITs, to buy shares in companies that invest in and lease commercial properties. This is certainly a fine option, but oftentimes better returns are found when cutting out the middleman and investing directly in deals.